Welcome to today's What Will Move the Market show. I'm your host Prem. It's Friday, October 31st, 2025, and here is everything you need to know as the markets open for today. Let's start with a rough ride on Wall Street last night. The Dow Jones fell 109 points or 0.23%. The S&P 500 dropped 69 points or 0.99%. And the Nasdaq was hit the hardest, tumbling 376 points or 1.6%. Here's what happened. Fed Chair Jerome Powell threw cold water on rate cut expectations, saying a December cut is far from not a foregone conclusion. Markets didn't like that. But here's the silver lining. After the close, we got some blockbuster earnings. Apple absolutely crushed it, surging 4% with a stellar revenue beat and a bullish holiday quarter guidance. Amazon jumped 14% after reporting blowout results from its cloud division, the fastest growth in nearly 3 years. These two megatech gainers are giving futures a significant lift. Meanwhile, Meta and Microsoft disappointed earlier in the week with concerns about AI spending dragging down sentiment. Bottom line, Wall Street's wrestling between hawkish Fed signals and stellar tech earnings. It's a mixed bag out there. Turning to our Indian ADRs, the mood is cautiously negative. Infosys ADR is down 1.42%. ICICI Bank ADR is off 0.93%. HDFC Bank ADR slipped 0.3%. These moves reflect mixed sentiment on Indian tech and financial services after the Fed's pivot. Across Asia, we're seeing a cautious open to the day. Japan's Nikkei 225 barely budged, up just 59 points or 0.12% to 51,367, holding near its all-time highs. The Bank of Japan kept rates steady, no surprises there. Hong Kong's Hang Seng climbed 179 points or 0.68% to 26,525. Shanghai edged up 5 points to 4,021. These gains reflect some relief from the US-China trade talks, with Trump and Xi agreeing to tariff reductions and commitments on rare earths and soybeans. Now here's what matters for your day. GIFT Nifty is currently trading up 35 points at 26,060, suggesting a cautiously flat opening for the Indian market. This is in line with the global uncertainty surrounding Fed policy and profit-taking after yesterday's week close. On the geopolitical front, President Trump's meeting with Chinese leader Xi in South Korea concluded on a positive note. The US is cutting fentanyl-linked tariffs from 20% to 10%, bringing the overall tariff burden on China down from 57% to 47%. In return, China is taking tighter action on fentanyl precursor chemicals and resuming soybean purchases. This deal is calming some trade war jitters globally, but investors remain cautious until they see real implementation. The overarching theme, Fed's hawkish rate pause, is the dominant story globally, tempering risk appetite and keeping volatility elevated. On the domestic front, sentiment is decidedly mixed. Yesterday, the Nifty 50 closed at 25,877, down 176 points or 0.68%. Dipping below the 26,000 psychological level on profit-taking and monthly derivatives expiry. The Sensex fell 593 points to 84,404. Broadly, the mid-cap and small-cap indices saw only mild losses of around 0.1% each. FPI flows remain a wild card. October saw net inflows of $413 million, but this was largely driven by the Tata Capital IPO. In the secondary market, FPIs are actually net sellers. Expect volatile trading given the mixed global signals. On the IPO front, Orkla India's bidding closes today, while Lenskart Solutions opens for subscription today with a price band of 382 to 402 rupees. That eyewear mega IPO is likely to attract retail interest. Let's talk technical setups for today. For the Nifty 50, here are your key levels. Primary resistance sits at 25,970. This has acted as a strong barrier twice yesterday. If we break above this convincingly, look for the next resistance at 26,000 flat. On the downside, primary support is at 25,790. If this breaks, watch for secondary support around 25,755. On commodities, crude oil is under pressure. WTI crude fell to $60.16 per barrel yesterday, down 0.53% and extending a losing streak. This is the lowest in 4 months, driven by oversupply fears ahead of next week's OPEC Plus meeting. Gold is trading tad above $4,000 and silver tad below $49. Here's today's tactical theme for traders and investors: defensive mode with selective picking. Given the Fed's hawkish pause and mixed tech earnings, I'd suggest staying cautious on broad market exposure today. The market will likely consolidate between 25,790 and 26,400 as it processes global cues. This is a day to watch sector rotation. Defensive plays like select utilities, pharma, and financial services might outperform. Avoid chasing early moves. Wait for consolidation patterns to form before committing fresh capital. This week's monthly expiry volatility is ebbing, so expect calmer order flows going into next week's new monthly series. That's everything you need to know going into today's market open. The tone is cautious, sentiment is mixed, but opportunities exist for selective traders. Stay tuned for our evening wrap, where we'll break down how Dalal Street navigated the day. And hey, send in your questions and trading themes to our team. We love hearing from you. Have a profitable trading day, and we'll catch you on the other side.